Hi there, Tim McCarthy here from Sage Business Group. With everything that's happening at the moment with stimulus measures and the like, from the announcements from our Prime Minister Scott Morrison, we've put together a short slide here of each of the measures. So this one today we're talking about is the instant asset write-off. The basic rules of the instant asset write-off is the aggregated turnover of the group of companies has to be less than $500 million per annum. So that will cover most people. The purchase for the asset can be up to $150,000 for this particular set of rules, exclusive of any GST, and needs to be purchased and critically point here must be installed and ready for use before 30 June. So the purchase date is between 12th of March 2020 and the 30th of June 2020, installed and ready for use. This is for the instant write-off, where you're writing off 100% of the cost of the asset. Quick example for you, Des buys a tractor. The tractor's worth $120,000 plus GST and installed and ready for use before 30 June 2020. Des will automatically claim his GST credit as he normally would in his BAS. His 2020 income financial year will be reduced by $120,000 as a result of the instant asset write-off. So Des' benefit here is the tax credit, the fact that he's going to receive money at his marginal tax rate. So if it's a company, most likely it's 27.5%. For an individual or a sole trader in business, perhaps a partner in a partnership, it can vary from 21% through to as much as 47%, depending upon the tax rate. But what it means is a tax credit. It's not actually a cash credit per se, unless there's been tax credits already paid, and then possibly get some of those back. And if it does create a loss, this loss will carry forward to later years and be applied against future profits. So this is a warning. There's nothing that's without a catch. And the catch is this, is that Des, in this example, still needs to fund the purchase costs and the finance costs of the asset. There's not going to provide any short-term cash flow relief for Des that he wouldn't have got from not purchasing the asset. And this is a really important one, the appreciated value of the asset ends up being zero once the write-off's taken place. So therefore, if the asset is sold down the track, which may be the case, that could create a tax liability associated with any profit on the sale. So always be wary of that event. Selling the asset down the track, it may be an add back at that point in time. Key messages here, just we want you to get through, is it's not just a free hit. Let's be careful of our cash flows. We still have to outlay the money up front. The financial benefit is more so a tax credit than necessarily a cash credit. This window does close though, as currently stands, on the 30th of June 2020, and it won't be providing you with short-term cash flow relief. So it may be a really good measure to use for you and your business to help stimulate the business and the economy and grow, but be aware there's two sides to the coin. If you've got further questions on this measure or any of the other measures in relation to stimulus or other issues that are happening in the economy at the moment, just contact your accountant at Sage Business Group. We really also suggest you follow our multi-channels through Facebook, LinkedIn, contact us through our newsletter, because we will be putting out more and more information, and we really suggest that it's worthwhile keeping up to date as we go along. Thanks for listening.